Hi everyone, everything, everybody. This is Masala Edgar Sadiki, your accounting grade 12 online tutor. Very much excited to be offering this service to you guys. I hope you're gonna enjoy this, and I hope it's gonna make a difference to your final accounting examination. So today we're going to be doing depreciation, looking at the 1 rand value, taking into consideration the 1 rand value method. So yeah, I hope you're gonna enjoy. I just said let me share my face before we go any further, so you know who is tutoring you. And then before we go into the details, let me just give you these basics. When we talk about depreciation, we are talking about when an asset is losing value through use. When the business buy an asset that they're going to use in production of income, that particular asset is going to be used. So when it is being used, it's going to lose value. According to the accounting principles of depreciation, it gets to a point where it loses value and gets to a zero, meaning that according to accounting principle, it is no longer useful. But when you look at the asset, you find that this asset is still useful. We can still use it in the business. So there is no way you can record an asset as zero in your balances. So yeah, let's talk more when we get into the details. We will be doing a previous question paper here. Yeah, I'm gonna hide myself for now because I want to have enough screen to can be able to doing the workings, the calculations and everything. I hope you're gonna enjoy the lesson. Thank you. Right. This is the question paper that we're gonna be doing. The question paper prompted us to do depreciation for equipment and vehicles. So the one that have the issue that I want to talk about is the equipment one. Right. Let's do this. First thing first, you have to check the information that you are given, that the examiner have gave you, and then you start working on it. I usually advise learners that immediately when you get your question paper, start by drawing your financial year. This is my financial year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So the examiner is telling us that we are reporting for a financial year that is ending 28 February 2023. Now, if your financial year is ending in February, it means that it have started in March, and then this block here is April, May, June, July, August, September, October, November, December, January. So from here going there, we will be talking about 2023. From here going that direction is going to be your 2022. Now let's go back there. Let's look at the information that we are given. You must be very much careful to see if the examiner gave you the amount which is the cost of the particular asset, or which is the opening balance at the beginning of the year according to the PPE that we're gonna say is a carrying value at the beginning of the year, or carrying value at the end of the year. You must be very much careful. Examiner is going to be specific on that because it's going to assist you when you draft your PPE note, property, plant and equipment, and also when you do your calculations. In this question, we were not asked to do a PPE note because if you can see, this question is actually on completing the statement of comprehensive income. So depreciation is in both statement of comprehensive income and as well on the statement of financial position. It's going to be on your statement of financial position when you are doing your PPE. And it is going to be on your statement of comprehensive income when you are doing your expenses, depreciation expense for that particular year that you are reporting on. Now, let's calculate depreciation for equipment. The examiner gave us equipment and this is the cost. How will you know it is a cost or it's accumulated? It's carrying value at the beginning of the year. Pre-adjustment trial balance. These elements that are written here are the name of accounts. So if it's written equipment, it is an account called equipment. So if it is carrying value at the beginning of the year, the examiner is going to be specific to you. They're either going to put it in brackets or just put a note underneath to say these are the balances at the beginning of that particular year. So if it's written equipment just like this, it means that is the equipment account and that particular amount is going to be regarded as the cost. Now, these are the comparatives. The information that we are given here, we are given these balances on the 28th of February. This is for 28 February 2022. This is for 28 February 2023. One other thing that you have to be careful of is that when they say 28 February 2022, it means that what we closed with in 2022 is what we are going to open with in 2023. So every balances that are here, every balance that is here are your opening balances. And then everything that is on the other side are your balances at the end of the year that you are reporting on. Because remember, we are reporting on the financial year that is ending on 28 February 2023. Now, let's go and find the information that we are given. We are given cost at the end, which is how much? 910,000. Right. These are other things that you can highlight immediately when you get a question paper. We are given a cost is 100,000. 910,000. I'm sorry for that. 910,000. What other information are we given? We are given as well accumulated depreciation on equipment, but this is at the end. This is at the beginning of the year, right? Accumulated depreciation at the beginning of the year. And how much is it? 782,000 is equals to 782,000. What other information are we given to do with equipment? Additional information H. We are told that there was a new equipment. There was a new equipment which was costing 50,000 and it was purchased on the 1st of November 2022 for cash. Transaction was recorded properly. And then depreciation for equipment is 15% per annum on cost. This is very much important. On cost. That is very much important. It means that whatever percentage that you are given, this 15%, you are going to multiply it on the cost, the original amount that was spent or that the asset was recognized with at the beginning when we put it in use. You go down and you say we have 50, I'm sorry for that, we have 50,000 which was bought on the 1st of November. This is the new equipment, right? And we know that our depreciation is 15% on cost, right? Now that's everything we have about equipment. Now let's start doing our calculations. Another tip that I want to give you, when you calculate depreciation, you must have your depreciation for the asset that was bought during the particular year that you are disclosing. And you must also have depreciation for the asset that has been sold. Then, lastly, you calculate depreciation for the old equipment that have been there for the entire 12 months. And then you're going to get your total that you are going to disclose here as your depreciation for the year. Another quick one, you must also know that when we talk about the 910,000, we are not talking about only one equipment. We are talking about all the equipments in the business that the business had. Sometimes you might find that it's only one equipment, one asset. Sometimes it might be two. Sometimes it might be three. It might be four. It might be whatever the amount. Right. Now, let's start with calculating depreciation for the new equipment. This is the most simplest one because even if you are using the different method of depreciation, straight line method, or you are using diminishing balance method, it's just going to be one and the same thing. You're just going to multiply with the cost because there is nothing that you have accumulated from previous years. Now let's do this. We are going to say 50,000 multiplied by 15 over 100 multiplied by how many months did we use this equipment? Remember, the equipment was bought during the year. And if it was bought during the year, it was on the 1st of November, if you remember. So if it was bought during the year, it means that we didn't use it for the entire year. We use it for a particular period of time. And depreciation is the loss of value of an asset through use. So you have to check how many months did we use that particular asset in the financial year that you are reporting on. We only bought it here in November. So it means that we have used it for only this month. We only bought it in November. So it's only 1, 2, 3, 4. So we only used it for 4 months. One other thing that you have to be very much careful of is that when we talk about the date on which the asset was bought, the examiner can say to you the 1st of November or can say the 30th of November. Yes, both of them are November, but the other one is on the 1st of November. It means that this asset, we have used it for the whole of November because we bought it on the beginning of November. This is the beginning of November. Remember, this whole block is November, this whole block. So this is the beginning of November. This is the end of November. So if it has been purchased here on the 1st of November, it means that we have used it for November, December, January, February. But if we have purchased it on the 30th of November, it means that it's here. So we only use it for December, January, February. So you must be very much careful on that. But in our scenario, it was bought on the 1st of November, meaning that it's 1, 2, 3, 4 months. So we only use it for 4 months. Multiply by 4 over 12. So what we are literally saying is that of the 12 months in a year that I'm reporting on, I only used it for 4 months. I'm going to emphasize this. Depreciation is the loss of value of asset through use. So you have to say this asset, which is costing 50,000, is losing 15% for the 4 months that I've used it out of the 12 months of the financial year that I'm reporting on. And then let's do our calculations quickly. We're going to say 50,000 multiplied by, open bracket, 15 divided by 100, close bracket, multiply by, open bracket, 4 divided by 12. And then we get our answer is 2,500. Now we come to our depreciation, I can say formula, whatever way you want to call it. We have our 2,500. Now let's look for the sold. It's very much advisable to draw this structure, even if you haven't looked at the question yet, if you have new, sold and old, because it makes you not to forget that you have to calculate them separately. Right, let's look for the sold. This is every information that we got from depreciation. So we have cost at the end, 910. We have accumulated depreciation at the beginning, 782. We also have 50,000, which is the new equipment, meaning that we don't have sold. So we're not gonna have depreciation for the sold. Now let's look for the old. Old are those that have been in the business for the entire 12 months. Right. Now, I want to give you another concept. When we talk about our PPE note, property, plant and equipment, you must know that you have your, okay, let me draw the structure first. You have your carrying value at the beginning. You have your cost at the beginning. You have your accumulated depreciation at the beginning. This is your structure. And then you have your addition at cost. These are the assets that you bought during the year. You have your disposal at carrying value. These are the carrying value of the asset that you have disposed. You have your depreciation for the year. This is the depreciation for each and every single asset that you have used in that particular year. And then you are going to have your carrying value at the end, which will be the cost at the end, and your accumulated depreciation at the end. Of which this minus this, it gives you this. Right. Now, this is another concept that I want to give you. cost at the beginning of the year plus addition, this is the cost of the asset that you bought during the year, minus cost of the asset that you have disposed is equal to cost at the end. Right. Now, from our scenario, we are given 910, which is cost at the end. Let's go put it there. $910. Okay, let me do this. Let me just 910. You will know it's 910,000. Eh? Today I'm using a small device, so I don't have enough space. Or let me rather take my calculator to the other side. We are given 910,000. And then we are given addition. We know that we have bought 50,000. And then cost of disposed, we didn't dispose anything. So from this information, we are able to get our cost at the beginning of the year. Why are we looking for the cost at the beginning of the year? Because we want to determine the depreciation. We want to determine the depreciation for the asset, for the equipment that have been in the business for the entire year, which qualifies to be calculated percentage by 12 over 12. Right. So if this plus this minus this is equal to this, then we are able to get what is at the beginning. So for those who are doing mathematics, we can say x plus 50,000 minus 0. It's very much important to put the figure even if you don't have anything, so that when you have something, you don't miss it out. Is equal to 910,000. Now let's solve for x. 50,000 minus 0 is 50,000. Then we have our x is equals to 910,000, and then our 50,000 is gonna jump and go to the other side. Then when it jumps, it changes out. The operating sign is going to be minus 50,000. Now let's do our calculations quickly. 910,000 minus 50,000, you get your 860. You get your 860,000. So this is your cost at the beginning of the year. 860,000. Now, why are we calculating this? So that we can be able to determine our depreciation for the asset that have been there for the whole year. Right. We are going now to say 860, which have lasted the whole year, multiply by 15 over 100, multiply by 12 over 12. and we get 860,000 multiplied by open bracket 15 divided by 100 close bracket multiplied by how many months did we use it? 12 divided by 12. 12 divided by 12 is 1. So even if you don't put this, you just say multiply by 15 over 100. It's still fine. But now it's best to do it so that the day that is not 12 over 12, then you are safe. Then we have our answer there is 129,000. Right. So this 129,000 is our depreciation for the old or for the remaining assets that have been here for the entire year. Now we are going to put it here. 129,000. And our total depreciation now is going to be 129 plus 2,500. 131,500. Now, this one is when we are doing it normally so. But now, I want you to be very much careful on the information that we were given. The examiner gave us the accumulated depreciation. The examiner gave us the accumulated depreciation at the beginning of the year. And when the examiner gave us accumulated depreciation at the beginning of the year, why? Because we are not drafting property, plant, and equipment note. Why why do we need that? Because we only need depreciation expense that we need to disclose in our statement of comprehensive income, which is your income statement. Right. Now, let's go and draft PPE note only for equipment. Then, surely we will see or figure out a reason why the examiner is giving us this amount. Right. We have calculated our cost at the beginning to be 860,000 and accumulated depreciation at the beginning of the year. We don't know. The amount that we are given here was accumulated depreciation. Oh yes, it's at the beginning. I thought it's at the end. 782,000. Then let's substitute 782,000. And we have our carrying value at the beginning of the year, which is going to be 860,000 minus 782,000. We have our 78,000 as the opening balance, carrying value at the beginning of the year. And we have our addition here, which is our 50,000. And then disposal, we didn't dispose anything. Depreciation for the year, let's leave it like this for now. Okay, or for now, let's put the one that we have calculated, 131,500 for now. Note this, I'm saying for now. 131,500. One 131,500. We are just putting it for now. And then, can we get our carrying value at the end of the year? Let's see. We have our cost, of which, remember I said, is the cost at the beginning plus addition minus cost of what we have disposed. Remember the note that I showed you here. Cost at the beginning plus addition minus cost is equals to cost at the end. It's just fortunate that at this particular question the examiner gave us the 910 already. So you are going to put here 910,000 and then your accumulated depreciation at the end. Let me give you another principle again. Remember I gave you the principle of cost. Now I want to give you principle of accumulated depreciation at the end. This is how it goes. Accumulated depreciation at the beginning plus depreciation for the year minus accumulated depreciation for disposed asset is equal to accumulated depreciation at the end. Right. Now let's go back to our PPE note that we are trying to draft. Accumulated depreciation. So it's going to be your 782 according to this is going to be your 782,000 plus 131. But remember the 131 I said we are just putting it for now. So meaning that the answer that is going to be here, we are also going to put it for now. Plus 131, 131, 500 minus depreciation for the disposed. We didn't dispose anything. Minus 0 is equals to 913,500. Right. We're just going to be putting it for now. 913,500. And then now let's get our carrying value at the end, which is the cost at the end minus accumulated depreciation at the end is going to give us our carrying value at the end of the year. Right. We are now going to say 910,000 minus 913,500. We are getting a negative. We are getting a negative 3,500. Okay, let me put it in bracket. Negative 3,500. I'm putting it in purple because it's just for now. This is a red flag. Remember at the beginning of the lesson, I said there is no way you can disclose your asset as negative balance. This is telling you that there is an asset that have depreciated more than the value. Right. Now, it can be the new asset, obviously. It should be the remaining ones. Now, we have the 78,000 as our carrying value at the beginning of the year. And we have our 129 as the depreciation. That is not doable. Fine. Let me explain another concept quickly. When an asset is bought 2 years back, it's going to depreciate for that particular year. Say, for example, we bought the asset for 1,000 and then it depreciates for 30,000, for 30,000, sorry. We bought it for 1,000 and depreciate for 300. And then the following year, it depreciates for another 300. It means that 300 is depreciation for that particular year. But accumulated depreciation is when we have accumulate all the depreciations for the previous years and we put them together. When it depreciates for 300, now it is going to be, let me just write this down. Year one, we bought the asset for 1,000 and then depreciation for year one is 300. Then we are left with 700 and then depreciation for year two 300. We are left with 400. Depreciation for year 3 300. We are left with 100 as carrying value at the beginning of year 4. Depreciation for year 4 300. Now we are left with minus 200. Red flag. You cannot have a minus. That is where the principle comes in. So what I was trying to say is that this 300 in year 1, you are going to disclose it as your depreciation. In year 2, you are going to disclose this 300 as your depreciation, and accumulated depreciation in year 2 is going to be the depreciation for the previous year and depreciation for this year. They have accumulated now. They are more than one now. In year 3, you are going to have another 300, meaning that accumulated now is 900. In year 4, you have another 300. Now accumulated is 1.2. Right. So when you get to a balance that is negative, what do you do now? One run method. You are going to say, okay, I'm not going to use the negative 200 as my carrying value at the end of the year. I am still using the asset in the business. It is still useful in my business. But according to the accounting principle of depreciation, according to the books, it has lost value. It is even in negative. So, because I'm still using the asset and the principles of accounting, the reporting of accounting, you cannot record an asset as negative or as zero, whereas it is still practically useful in your business. So this is what you're going to do. You're going to say, no, I'm not going to do this. My carrying value at the end is going to be 1 rand. So if it is going to be 1 rand, where is the 1 rand coming from? Is the principle of accounting that says you have to disclose your asset as 1 rand if they have depreciated to 0 or to negative. The useful life has come to an end according to the depreciation method, but you are still using, practically you are still using the asset, and you cannot use an asset that is not disclosed in your books. Right. Now you are going to work going backwards now. The reason that your depreciation is negative 200 is because your carrying value at the end is 200. It's negative 200. It's because your depreciation is 300. So now you want to make your carrying value 1 rand. When you want to make it 1 rand, meaning that you have to work it going backwards now. You have the carrying value at the beginning of the year 100. and you want your carrying value at the end to be 1 rand. What are you going to do now? Solve for x. 100 minus x, which is depreciation, is equals to 1. And then you solve your x. Your 100 is going to jump and change the operation sign. Now you are going to have 1 minus 100 is equals to negative x. Now 1 minus 100 is going to be negative 99 is equal to negative x. And then we want to kill the x, divide by negative 1, divide by negative 1. And then this is going to cancel, this is going to cancel. Now your x is equals to 99. So it means that your depreciation now is going to be 99. That is what you're going to disclose. Now let's put this into our scenario now. We have our carrying value on the current year. Let me change this and say current year. Right. We have our carrying value at the beginning of the year, which we have calculated to be 860,000. Remember, we calculated it up there. And then we have our depreciation, which is 129,000, which is giving us a negative. I made a mistake here. This is not our carrying value at the beginning. Our carrying value at the beginning is 78. That was cost. Let me just scroll up so that you see what I'm talking about. Okay, this is the cost at the beginning of the year, and this is the carrying value at the beginning of the year. Right, now we have our 78,000 minus 129,000. We are having our carrying value at the end as negative 51,000. This is not doable. We're gonna take this out, take this out. We want our value to be 1 rand. Now let's solve for x. $78,000 minus x is equals to 1 rand. And then this is going to jump. And then when it jumps, it's going to be now 1 minus 78,000 is equals to negative x. And then let's go to our calculator. 1 minus 78,000 is equals to negative 77999 is equals to negative x. Now we remove the negative, divide by negative 1, divide by negative 1. This is going to cancel this, and then we're going to be left with our 77,999 is equals to x. So this is what you're going to disclose as your depreciation, 77,999. 77999, so that you are left with your 1 rand as your carrying value at the end. Right, so now let's go replace those amounts that I said we are putting them just for now. So 77999 is the depreciation for the remaining assets. We were here. Okay, let's start here. Just a quick reminder, this was the depreciation for the new asset. We didn't have the sold. This was for the remaining ones, but it's now more than the carrying value at the beginning of the year. Hence, we did the calculations we were just doing now. We have now this is the amount here in our calculator. We have now our 77999. Now, total depreciation for our equipment that we are going to disclose in our statement of comprehensive income, or the income statement as you say. Let's multiply this by -1. What am I doing now? Multiply by -1, so that we remove the negative. Right, and then 77999 plus 2500 is going to give us 80499. This is your total depreciation for equipment that you're going to disclose in your books. Let's remove this one that I said. Let's put it for now, and let's put the correct one. 80499, which is also going to affect this. Okay, my pen now is not doing what I want to do. Okay, now accumulated depreciation at the end, we are going to have our 8, the one that we just calculated, plus the accumulated depreciation at the beginning of the year, plus 782,000 minus accumulated depreciation for the disposed asset. We didn't dispose anything, minus 0 is equal to, then this is your accumulated depreciation at the end of your financial period, which is also going to affect your carrying value at the end. Now your carrying value at the end is going to be 862. What am I doing now? It's going to be cost at the end minus accumulated depreciation at the end, which is your 910,000 minus 862,499, and you now get your 47,501. Then this is what you're going to disclose in your PPE note. It's just that in this question we are not doing PPE note. I was just doing this whole thing so that you understand how we come about which amounts. So for this particular question, what is needed is the depreciation for the year. Right. I hope this makes sense and I hope you enjoyed this lesson. So if you want to prove yourself, usually people, learners say accounting does not have enough time, we don't finish accounting, this and this and that. But if you have enough time to prove this, what is happening here is that we had an asset at the beginning of the year which have lost value and it is left with 1 rand, and we have the new that we bought for 50,000 and it only lost value of 2.5 as we have calculated. Where is that calculation? 2.5. It only lost 2.5. So what we literally have is 50,000 minus 2,500. It's 47,500 plus, okay, let me do this, let me say equal to. It's much safer to do this because other calculators are something else, plus 1 rand for the other one that is has lost value and we recognize it in our books as 1 rand. Then it gives you your 47,501, and then you proved that you are correct. So remember I gave you a principle here on how you go about, okay, let me close the calculator because we are done with it. How we go about our costs on your PPE note. Remember, this is your PPE note. I said when you talk about cost, we are talking about cost of the beginning, at the beginning, plus addition, plus cost of disposal, minus cost of disposal is equals to cost at the end. I also spoke about your depreciation. Okay, I didn't write it down. Or I did. I also talk about your depreciation to say accumulated depreciation at the beginning plus depreciation for the year minus accumulated depreciation for the disposed asset is equal to accumulated depreciation at the end. Right. So I now told you how to get this one and this one. Now I want to tell you about how to get this one, which is a little bit complicated. To get this one, S is the carrying value. Remember I said the cost is every cost up there. Cost at the beginning, cost at addition, cost at disposal, cost is equal to cost at the end. And then the accumulated depreciation, I said is accumulated depreciation at the beginning, depreciation during the year, minus accumulated depreciation of the disposed. Now, let's talk about the carrying value at the end. Is it carrying value at the beginning plus carrying value during the year? Is equals to carrying value? No. You're talking something else that doesn't really make sense in accounting. Okay. The carrying value at the end is indeed your carrying value at the beginning of the year minus your carrying value of the disposed asset plus the carrying value of the addition. Right. So in other words, what I'm trying to say is that now I closed my calculator. Okay, but this one is not a big deal. I can just explain it. Remember your cost at the beginning. I'm talking about the beginning of the term of this asset that we bought during the year was 50,000, and then we now have deducted the 2,500. So meaning that we are left with 47,500. And I said, is the carrying value at the beginning of the year, which is 78,000, plus carrying value of the new asset minus carrying value of the disposed asset, if we have disposed anything. Then now when we talk about the loss of value of asset through use, it brings us to our carrying value. So now we're also going to take out the depreciation for the year. And in this depreciation for the year, there is another portion of this which we have written off, because okay, let me repeat this nicely. I know that I might have confused most of you. Let me start from the beginning. Cost, carrying value at the beginning of the year, which is 78,000, plus the carrying value of the new asset, which was 50,000 minus 2,500, minus your depreciation for the year, which is 80,499, plus the 2,500. That is from our new asset. Remember this, I was just giving you a hint. We can discuss this further in our next class. And then, yeah, we are done today with the lesson of explaining how the one run method go about and how do you disclose depreciation for the asset whereby depreciation is more than carrying value at the beginning of the year. Thank you very much. It was nice having you. Stay tuned. I'm gonna be uploading other videos, not so long. And then what did I wanted to say? For consultations and online classes, Ishe Accounting Academy, text us on WhatsApp 071 121 445. Any consultation, any our online classes, we have our online classes every Tuesday and Thursday evening, preparing for final exam. These ones are not for free. Text me and then we will take it from there. Thank you very much. Enjoy the rest of your day and good luck on your paper. Thank you. Bye.